All right, let's get to some real estate talk today. We've been watching interest rates go up and up and up as the Federal Reserve has been trying to stamp down inflation. But those rate hikes, for now, we should mention, they've stopped. And any move or any non-move in this case has a big influence on the housing market. Los Angeles real estate agent and our expert here on Current, Keri White, joining us right now. Keri, give us a quick refresher, right? Where have interest rates gone and where are they right now today?
Interest rates are the roller coaster of 2023 and 2022, really. We have seen them fluctuating more so than we've seen in years. We've hit the highest interest rate we've ever had since 2007, which is pretty significant. And we saw the Fed raise interest rates, the basis point, by over 5 this year. So we've seen some dramatic fluctuations. And just recently, just 2 weeks ago, Jerome Powell met, which they thought they would skip this meeting, and they've decided we're going to pause rates increasing right now while we assess the economy. So that is overall good news.
So Fed Chair Jerome Powell, who you just mentioned there, he also referenced a bottom in housing, but he was pretty vague and didn't really specify what exactly was bottoming out. What data is the Fed looking at when making interest rate decisions for us?
Yeah, Colton, I thought the same thing. It was a bit vague. So I was trying to dig into it to help explain to some of our clients. And, when making these interest rate decisions, the Fed Reserve considers a wide range of economic data and factors. And they're like in unemployment rates, inflation levels, GDP growth, consumer spending. So they're looking at all of these things and they're trying to make a decision. So when they reference the bottom in housing, it indicates the Fed is monitoring the housing market specifically to assess it if it's reached a stabilization point or maybe further decline is expected. So that's what they're really looking at, the bottom as it relates to housing and prices. And, as economic conditions evolve, the Reserve will continue to assess everything and, adjust accordingly. But right now, it's taking a pause. So everyone's feeling a little bit of a breath, which is nice.
Yeah, seriously. Listen, it doesn't look like interest rates are going to be near zero anytime soon. What do you think the sort of new normal will look like once the economy works through this stretch that we're in, even though we are taking a nice sort of pause right now and can relax with the interest rate hikes?
Right. I mean, it is scary when rates were hitting 5, 5.5, 6, and then all of a sudden they tipped 7. It was like, oh my God. And then they went back down to 6 and everyone's like, wow, 6. So really it's a matter of us getting used to what the new normal. Ooh, did I freeze? They did say that rates are going to go back to low 5s, but we haven't seen that happen yet. And I think we need to get adjusted to the fact that rates are probably going to be in the 6s for the foreseeable future, at least for the next year or two, and plan accordingly.
All right, Keri. In the meantime, everyone, you can make sure that you follow Keri on Instagram at Keri and subscribe to her YouTube channel, Keri White Real Estate. Keri, as always, we appreciate you jumping on. For everyone else, we'll be right back after this.